Welcome back to Investing Talk Podcast.
Today we're looking at Robinhood.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. We have some truly remarkable numbers that just came out of the company.
Yeah, they really suggest a fundamental shift in their operational success, especially around their profitability.
The Q3 performance alone was just explosive. I mean, we saw total net revenues climb to $1.27 billion.
Which is what, something like 26.5% year-over-year growth? That's
Yeah.
significantly faster than, many of the legacy players.
It really is, and it even outpaces some of their direct fintech competitors.
And the bottom line, I think that's where the story gets really interesting.
Exactly. They reported a net income of $556 million for Q3 alone.
For the quarter.
But if we look at the trailing 12 months, that's where you really grasp the scale they've hit. The company reported $4.2 billion in revenue.
Okay.
And a really substantial TTM net income of $2.19 billion.
So when you run those numbers, that suggests a trailing 12-month net margin of around, 52%?
52%. I mean, that figure is huge, and it demands an explanation.
It really does. For a fintech platform, a 52% margin indicates just phenomenal operational leverage.
It shows they've hit a scale where any marginal revenue drops almost straight to the bottom line, without a corresponding cost increase.
And it's largely driven by the composition of their revenue, right?
Right. A transaction-based side is just firing on all cylinders, led specifically by options and cryptocurrencies.
The highest margin products on their platform.
Absolutely. Because of the payment for order flow structure and just the inherent volatility in those assets, the high frequency of trading there is a huge multiplier for their earnings.
But doesn't that reliance, that 52% profitability driven so heavily by options and crypto, doesn't that introduce a systemic risk?
It does.
How much of that growth is just cyclical, reliant on market volatility versus something that's actually repeatable?
That is the critical analysis point. They are inherently tied to retail enthusiasm, but the fact remains that their total platform assets nearly doubled year over year. They hit $279 billion by the end of Q3 2025.
So this isn't just traders moving money around.
No, this points to robust, sustained net deposit inflows from new and existing users who are choosing the platform for their longer-term funds. It suggests a maturing user base.
And that efficiency, that asset growth, it's clearly resonating on Wall Street.
Oh, for sure. We've seen a noticeable uptick in optimism recently. It indicates analysts believe this profitability is structurally sustainable, not just some, pandemic-era fluke.
Right, like JMP.
Yeah.
They boosted their price target substantially, moving it from 130 all the way up to 170.
And we saw Goldman Sachs follow suit, raising their target from 134 to 146. This confidence from analysts is, I think, directly linked to their strategic roadmap,
Which has been executed very aggressively in the back half of the year.
It has. The competitive moat for the company isn't centered on zero-commission trading anymore.
No, everyone does that.
Exactly. Now it's about strategic expansion and offering sticky, sophisticated products. They closed 2 major, highly strategic acquisitions back in October.
Let's start with Trade BMR. They spent $175 million to acquire that company.
Right, and that company focuses on wealth management technology. This is a critical pivot for them.
A move-up market.
A direct move-up market. Wealth management services target higher net worth individuals and, typically involve long-term planning-based relationships. They're far stickier.
And they generate more predictable, annuity-like fees than just retail brokerage.
It also lets them provide sophisticated tools and services to registered investment advisors, RIAs, who manage client assets. This acquisition immediately changes the perception of Robinhood from just a retail trading app
to a comprehensive financial platform.
Exactly. The long-term value of those stickier assets, it far outweighs the acquisition price as long as they integrate the technology smoothly.
And then there's the second major acquisition, Bitstamp, for $224 million.
Which signals their international and crypto ambitions in one single stroke. Acquiring Bitstamp not only boosts their total crypto assets, but, more importantly,
the regulatory side.
It provides immediate regulatory infrastructure and a foothold to potentially expand into the lucrative European crypto markets. They basically bought regulatory compliance.
It's all about strengthening user retention by offering more products. And the numbers, they really back up the success of these rollouts.
They do. They still maintain sector leadership among the new wave of retail brokerages. They just keep rolling out features from expanded crypto to fractional shares.
But the clearest metric of their maturing user loyalty has to be their premium subscription service.
The Robinhood Gold subscription base.
Yeah.
They hit a record 3.5 million subscribers.
Where did you pause on that number? 3.5 million people are paying a monthly fee.
Paying a monthly fee to access features like better margin rates, higher interest on cash sweeps, that demonstrates a serious shift in user commitment.
Yeah, it moves past the free app mentality and really integrates the platform into their core financial life.
And all this ambitious spending, this expansion, it naturally leads us to the health of the foundation supporting it.
The balance sheet.
And it looks exceptionally healthy, which is crucial when you're integrating two major acquisitions at the same time.
I agree. The market cap is robust, sitting around $106 billion. And importantly, they are operating with very low leverage.
They're financing this growth through their strong free cash flow and cash on hand, which is exactly what you want to see from an expanding growth company.
And not only are they funding R&D in these acquisitions, but they've also been actively executing share repurchases.
Which is a key action. It's aimed at enhancing shareholder value, and it's often used to signal management confidence. And, well, to offset one inevitable side effect of rapid growth. Dilution. And that brings us to the elephant in the room that often concerns investors, which is insider activity.
We have to discuss the risk signal presented by the significant insider selling that occurred throughout November.
Yeah, substantial selling by senior executives can, naturally be viewed as a major red flag.
And we saw directors and executives, including Stephen Quirk, Jonathan Rubinstein,
and Daniel Gallagher, all executing open market sales, and the price range was high, running from about $131 up to $146.
And maybe the biggest headline-grabbing sale involves the Baiju Bot Living Trust. They converted and sold 1.33 million Class B shares.
That is a significant reduction in holdings by a major founder. However, we have to provide the necessary context here.
Which often gets missed in the headlines.
It always gets missed. The context is everything. We understand these sales were executed under pre-adopted 10b5-1 trading plans.
Right. And for those who aren't familiar, a 10b5-1 plan is a pre-scheduled written agreement that allows company insiders to trade a predetermined number of shares at a predetermined time.
Think of it like setting a selling schedule months in advance, regardless of what that insider knows today.
It's a mechanism designed to remove the appearance of trading on material, non-public information.
It effectively takes the immediate fire sale concern off the table. They are automated, structured sales, often used for, long-term wealth diversification.
And the company is actively executing Class A share repurchases to offset that dilution.
Exactly. When we talk about dilution, we're often talking about shares issued from things like RSU, vesting restricted stock units, which are a big part of compensation.
So as those RSUs vest, they flood the market with new shares.
Right. The company's repurchases act like a vacuum, absorbing those shares and counteracting the dilution. It protects the value of existing shares and offsets the impact of those planned sales.
And what's more, while some insiders were executing these scheduled sales, the broader institutional picture, that remains positive.
It does. We've seen large investment managers, including behemoths like Vanguard, updating their equity ownership filings, the 13G and 13A filings, throughout 2025.
And these collective updates signal an increase in overall institutional holdings.
So while early executives may be diversifying under these pre-planned structures, the sophisticated long-term funds are actually increasing their exposure. It suggests confidence in the company's multi-year strategy.
Okay, so shifting gears to the technical picture now. The technical momentum seems to align perfectly with the fundamental strength we've been talking about.
This is not a flat stock.
No.
The technical setup is distinctly bullish. We're seeing a clear pattern of higher lows and higher highs over the past year. That confirms a strong, enduring uptrend.
And crucially, the stock is consistently trading well above both its 50-day and 200-day moving averages. That's textbook technical health.
It really is. And when we zoom in on the immediate technical outlook for, say, the next 3 months, the stock appears to be consolidating within a defined trading range.
Right. Strong support currently holds around the $110 level. That represents a pretty solid floor for the stock price.
However, the immediate resistance is clearly defined near $145.
So given the recent closing price was around $121, there is still significant upside potential, about 20%, just to test that upper resistance band.
And the technicals suggest momentum favors a breakout to the higher side.
And the volatility isn't just going to wait around. There are several imminent catalysts expected to drive movement over the next few months.
Starting right now.
Starting now. We have the institutional flow anticipated from the ETF rebalancing window, which generally hits between late November and early January.
And this rebalancing forces large passive funds and ETFs to buy or sell shares to match updated index weights. Given the stock's recent performance and inclusion in various growth indices, this is generally expected to translate into strong buying pressure.
Then we hit February 2026, which is going to be a critical month for the company. We have two major events colliding.
First, the crucial institutional 13F filings are due.
Right, so the 13F filing is that quarterly report required by the SEC from all institutional investment managers with over $100 million in assets.
And these reports show what they bought, what they sold, what they held. The February filings will give us the clearest picture yet of exactly which major funds piled into the stock during the recent rally. It'll confirm that institutional appetite.
And second, and maybe the most critical event in February, is the Q4 earnings release.
Investors will be scrutinizing everything. They'll look at cost controls, crypto and options trading volumes, and most importantly, the early signs of how successfully management is integrating those two major acquisitions.
Trade PMR and Bitstamp. How they're hitting the financial statements and overall operation.
Those are the confirmed triggers, but we can't overlook the noise, especially when that noise suggests truly massive upside potential linked to innovation.
Absolutely. The speculative upside is what could transform this from a good growth story into a potentially explosive one.
There is persistent, unconfirmed industry chatter that the company is deep into developing and potentially debuting advanced AI-driven investment tools in early 2026.
If Robinhood successfully integrates real, usable AI tools, not just chatbots, but tools that offer personalized insights or risk modeling into its retail platform, that would be transformative.
It would be a massive differentiator. It would put them years ahead of legacy brokerages.
And we have to circle back to their international ambitions. Speculation about accelerating cross-border entry has been around for years.
And the Bitstamp acquisition, as we mentioned, it provides immediate infrastructure and regulatory avenues for them to expand into those lucrative European crypto markets.
And this isn't just about crypto exposure. It signals that a broader geographic push may be imminent, setting the stage for them to move beyond North America.
If they can replicate their simple, low-cost model in major European economies, the market opportunity just multiplies dramatically.
Finally, there are those market rumors, the ones regarding strategic partnerships that could deepen their integration into the consumer financial ecosystem.
Yeah, the chatter suggests they're negotiating with a top-tier bank, possibly concerning payment and advanced cash management features.
Securing a significant alliance like that would dramatically expand their product reach. It would deepen their integration into the everyday financial lives of their users.
It moves them far beyond just being a brokerage app. They want to be the primary portal for their users' money, not just the trading sideline.
So when we wrap this up, what's the central thesis here?
Well, while the insider selling presents a valid consideration, and you should always understand the context of 10b5-1 plans versus actual bearish sentiment, that risk is, I believe, fundamentally outweighed by a confluence of powerfully bullish factors.
The combination of the robust Q3 financial outperformance, achieving that incredible 52% margin,
Successfully executing on sticky strategic acquisitions like Trade PMR and Bitstamp,
and the strong technical momentum we see ahead of critical institutional rebalancing and the Q4 earnings report.
it all establishes a very compelling near-term and long-term trajectory for the company.
The company is aggressively transforming its identity. It's moving from a meme stock facilitator into a sophisticated, highly profitable financial platform focused on diversification and international scale.
I think the fundamental question for you as an investor is this. If Robinhood successfully cracks the high-barrier European market and fully deploys sophisticated AI tools as rumored, are they set up to evolve into a true financial super app that transcends traditional banking and brokerage within the next 5 years? That's a long-term bet.
Stay informed and track those developments because the next 3 months, culminating in that February earnings report and the 13F filing window, are going to be critical for the company. Make sure you subscribe to the podcast so you don't miss our analysis when those numbers drop.